just about flat. Markets were actually in the red when we started out with the show. Right now, they have fortunately turned green. Nifty is trading at 10,475. Sensex is up about just about 20 odd points really at 35,448. Broader markets relatively outperforming, but the quantum of gains there is also very, very insignificant. Both small and mid cap gaining about 0.2% each. Let's see what are the sectoral performers which are standing out. You have a PSU Bank Index which is up 1%. Nifty Auto looks like it's in the fast lane today, gaining close to about 0.7%. FMCG pack is up almost 1%. But what's capping the upside? You have a Nifty Pharma up 1.2%, down 1.2%. I'm sorry. Nifty IT is down 0.3%. Nifty Bank is down almost 1%. Talking about some individual names as well from the benchmark index, you have and IndusInd Bank, after surging big time yesterday, you have some profit taking being witnessed there. The stock is down 2%. ICICI Bank down 2% as well. From the pharma space, you have a Cipla down 2%, Sun Pharma down almost 2%, then a Power Grid, HCL Technologies, BPCL, Axis Bank, Bharti Airtel. These are some names which are losing right now in the excess of 1.5%. Varun.
Right, Karanya, it's just so interesting because we're just so used to seeing the market rally over the last couple of weeks that today's move is seeming a bit odd, but I guess some consolidation and profit taking is warranted after what we've seen. But moving forward rather to the COVID top 10 for this morning, global cases crossed 93 lakh with over 4.7 lakh people now dead. Cases in India have crossed the 4.5 lakh mark with 14,000 dead. PM CARE allocates 2,000 crore fund for 50,000 ventilators. ICMR advises that state governments are to scale up testing. India's largest COVID facility to start this week. Government seeks details for Patanjali's COVID drug. BMC to ensure 1 lakh rapid testing kits in the city. Novak Djokovic tests positive for COVID-19. The UK is to reopen pubs and hotels from early July, and Saudi Arabia limits Hajj pilgrims to 1,000.
All right, moving back once again to markets and a big ET Now exclusive. Jim Rogers mentions that global markets would be impacted if lockdowns are reimposed. He also talked about oil reaching a serious bottom and recommends investing in gold during these testing times. Here's why.
Most governments will not close down a second time around. At least they will not be as draconian as they have the first time around, because they realize, the cure can be worse than the disease. And in some countries, the cure has been worse than the disease. So you will not see that again. You may see areas closed down, but the basic economic damage has been done. There will be more if there are more closed downs. But no, countries now realize that they have to eat and they have to survive, and closing everything down will not work.
Mr. Rogers, in hindsight, when we will look at the lockdown which global leaders, in a sense, decided to do to prevent the spread of coronavirus, do you think a year from now, 6 months, 2 years from now, 5 years from now, that will be called as the biggest mistake of modern history by global politicians who've used a hard hand to control coronavirus?
Well, the biggest mistake of modern history is quite a statement. I will certainly say, I know we're going to look back and say it was a very bad mistake, and it was a mistake of history, the biggest in modern history. Certainly the biggest mistake of 2020, and certainly a very, very big mistake. Not everybody closed. Sweden didn't close. I mean, they have problems, but they didn't close. They say that in the end, they will come out ahead, because other people will have recurrence. 8 American states never closed. Belarus never closed. So not everybody closed, but as far as I can see, yes, it was a mistake, and we should not have done it.
All right. We now have Kunal Bothra and Gaurang Shah with us. Good morning to both of you. Welcome to the show. Kunal, let's come to you first. Looks like we're seeing a spot of weakness at this time compared to what we've seen over the last couple trading sessions. And one makes me wonder, is this because we're going closer and closer to Q1 earnings, or is it just a day of consolidation?
I think it's a day, of very important, I would say resistances or very important levels for the index, Varun, and I think that's where the markets are now trying to take respect of. So, first of all, the Nifty's clawed back to a 61.8% retracement. These are very important and key Fibonacci series numbers, and they generally tend to act as good resistances or supports in the short to medium term. So it depends on where the projections are. So as of now, the 10,550 mark on the Nifty, which we tested on spot levels, is a very important resistance because we tested that 61.8% retracement zone. Now for Bank Nifty, I think the 20,400 high which we made today as well is again a 38.2% retracement. So these are very two important levels to take note of. Now look at it the other way around. Tomorrow is the expiry for the June series. We had fabulous 3 months for the markets, and now 10,500 strike on the Nifty options is acting as one of the highest open interest built up. So I think what's very interesting is after a 170 point up move yesterday on the Nifty, so from 10,300 to a 10,470, there was in fact additions towards a 10,500 strike. So there was strong call writing which happened at 10,500. So that itself tells you that the ones who were short on the Nifty options, call options, they're still maintaining their stance even after the 170 point up move on the Nifty yesterday. So which is why this is a very important level or a hurdle to cross. I believe that maybe for the next 2 days, specifically for this expiry, the Nifty should take resistance over here and probably go through some bit of retracement or a mild cool off.
Okay, Gaurang Shah is also with us. Gaurang, Kunal is sounding a little cautious over the near term, but from a long to medium to long term perspective, what are some stocks that one can still be optimistic about?
Thanks, Karanya, and morning to all of you. So I think it's only prudent to be a little bit cautious at current levels. And in fact, what we advised our clients this morning was to try and take some money off the table if you bought anything from a short to medium term point of view. And let me say this, Karanya, that the returns that short-term, medium-term investors are making, purely if you take into account the rally that we've seen over the last 7 to 10 days, I think it's mouth-watering. So it's prudent to see these kind of corrections from the levels that we've seen, higher levels that we've seen this morning. And what I would also request is that, if you don't want to book profit, then at least put a profitable trailing stop loss in place so that you can maximize your profits in case if the markets have to correct down further. And given the fact that you have expiry tomorrow, I think today, second half, and tomorrow, the entire day, there's going to be a lot of choppiness and volatility. Having said that, two investment ideas from a long-term time horizon. First one is Coromandel International. Again, this is to do with the story. One of the, largest private sector fertilizer manufacturing company. And with the kind of focus that the government has put in place to boost the agri sector, and along with that, Karanya, to improve the livelihoods of semi-urban and rural folks. My sense is that companies like Coromandel International should do phenomenally well. And if you take into account the last 2 to 3 months move on this particular counter, I think it speaks for itself in terms of the upside that is there. So from a long-term point of view, we are targeting somewhere close to about 850 to 860 on Coromandel International. The second one is from the life insurance space, which we have spoken earlier as well. ICICI Prudential Life, I think with the kind of correction that we've seen, the stock has become a very attractive. Of course, we've seen some recoup of those losses also, but where the stock is trading at current levels, somewhere close to about 430, 440, I think these are some interesting levels to get invested into these stocks. And more importantly, I think the entire philosophy of insuring oneself has changed post the Wuhan virus, Chinese virus, COVID-19, whatever you want to call it. And we believe that there's going to be tremendous scope for insuring the uninsured, and these private sector players should, be able to create a larger market share. So over there in ICICI Prudential Life, we have a target of 445 long term again. 545, I beg your pardon.
All right. Okay, Kunal. Gaurang. Kunal, what are your trading calls?
Well, Karna, as I said, that I'm a bit cautious on the index from the very, very near term for the next couple of days. So I will probably look at some sell calls. So the first one is a sell on TCS. Even though the IT index has been more in the limelight, there has been a struggle for many of these large cap IT names in the last 1-2 weeks. TCS is hovering just about its 200 moving average, and it's not done extremely well in last 1 week. It remained more sideways. So I believe that this could be a set of stocks which can buckle up first under the pressure. So hence a sell on TCS from near term targets of 1950, stop loss 2105. And the second would be a sell on Cipla as well. Now this is interesting because I think 2 or 3 days back there was a big spike up move for Cipla. It tested almost at 690, 700 kind of levels. But then there was very strong call writing which happened at the 700 mark even on those kind of opening days. So that tells you that there's been some strong resistance for Cipla which has built in from the near term view. So keeping that view in regards, I would suggest a short or a sell call on Cipla as well from a near term target of almost 620 on stop loss to be kept at 666.
All right, Kunal, thanks for those. Let's move on to our queries in that case. And our first query is from Karan Kaushal, and he's bought 75 shares of Indiabulls Housing at 950. He's also bought 500 shares of D1 Housing at 170. And he wants to know if he should hold or sell. So, Kunal, let's come back to you. On the charts, what do you have to say about these two stocks?
Well, I think for D1 Housing, of course, I think I would definitely suggest an exit at current levels or any minor rallies, and I think so would be the case for Indiabulls Housing as well. So look at it this way: that in the last 3 months, which are the last sectors or the last stocks to try and give you a rally and a big spike up? So I think it's the likes of NBFCs in the financial services name, and of course Indiabulls Housing has done extremely well in that regards. But again, it's the last mover in the entire market rally as well. So that generally indicates that maybe the stock could probably have resulted into some sort of a toppish formation. I think a sell on rallies approach for Indiabulls Housing could be a good approach. So I'm not sure whether the stock can probably even come back to the purchase price of the investor. So I think if you have a strategy for Indiabulls Housing, then I would advise sell on rallies starting from current levels maybe.
Okay. Gaurav, what is your view on Indiabulls Housing? DHFL, of course, is quite a tricky one there, but over the long term, given that there's no given that the viewer can hold on to it for as long as possible, so do you see any potential in any of these names?
Well, Karina, to be very honest, the investor wants to hold on because the kind of losses that the investor is making. You look at the acquisition price and look at the market price of both the stocks. Forget about Indiabulls, I mean even DHFL. And I think this gentleman or this investor had plenty of reasons and news flows over the last maybe about 6-8 months, 1 year to come out of the stock. And my humble advice to all the viewers is that don't let your capital erode so much that the recovery of your capital is in a big jeopardy. So take appropriate steps once you feel that your risk levels have got triggered off. Don't wait for your capital to erode 50%, 60, 70% or 80% as a matter of fact. So for Indiabulls, we have dropped the coverage. I would advise the investor to shift to either HDFC Limited or LIC Housing Finance from a long-term point of view, possibly of recovery of losses over there. And D1 Housing Finance, I think over here, it is more than a year that the news flows has been negative. So you should have paid attention to your investments and the news flows in the companies where you have invested. I would suggest a switch to maybe something like an L&T Finance and Holding. Again, a possibility of recovering some losses from a long-term point of view.
All right, that's the verdict coming in. Both of our analysts are quite, want to stay away from both of these stocks, whether it's Indiabulls Housing or a DHFL. But moving on to query number 2, Sagar has written to us, wants to invest in RIL and DMart at the current market price. how should they strategize their investment? Should they buy on any kind of dips that these stocks witnessed at any point in time? Kunal, coming to you first, given the run-up seen in both of these names, what would be your advice?
So yeah, I think for Reliance Industries and DMart, I think these are top quality names. Reliance Industries, of course, has proven its mettle in the last 3 months, and over the last, I think, 2-3 years as well, specifically when that big breakout happened for Reliance Industries after 10 years of sideways range. So both from a longer term view as well as from a short term view, I think the stock has proven its character. Now in that regards, I think it's a good stock to hold on from a longer term view. Now when you're looking to start buying the stock in the thick of or the prime of the news flow, there are bound to be periods where the stock can go through sideways ranges. There are bound to be periods where the stock may go through a sharper correction as well. So try and take opportunity of those kind of corrections. So I would say start buying both of these names, but then have a staggered approach as well. That if the stocks correct maybe a 10-15% kind of fall at every of those 10-15% correction, you should try and lap onto maybe additional quantity or additional purchase into these names. I think that's a better strategy to try and look at it from a longer term view.
All right, Kunal, thank you for that. Gaurang, I know it's two heavily discussed stocks. We talk about them all the time, but what's your take here?
So Varun, undoubtedly both of them have got history of creating wealth, and you and Karanya were just discussing this stock a while back as to how in a black swan event over the last 2 to 3 months, Reliance has been able to create wealth for investors with investments in Jio's platform. And I think this run rate is going to continue. So my advice to Sagar would be, Varun, that start allocating capital at current levels. And the best strategy, if you will, would be to do an SIP in both these stocks. Every month, go on buying whatever quantity, whatever investable surplus you have into both these stocks. And in the next 3 to 5 years, you will have sizable amount of shares, sizable amount of investment, and a fantastic rate of return on investment as well.
Right, Gaurang, I concur with your view. So that query has now been addressed. Let's move on to the final one for this morning. Nageswar Rao Annavapurva has written to us. He wants to buy GE Power at the current market price, and he wants to know if it's a good investment or not. So Gaurang, let's stick with you. What's your take on GE Power?
Well, Varun, don't remember if we have a coverage on this particular stock. So I would not want to comment specifically on this particular stock since we don't have a coverage. Apologies for that.
Sure, that's understandable, of course. Kunal, do you want to step in perhaps on GE Power?
So yeah, I think the stock, again, as we've seen last 1-2 months, a lot of the mid cap and small caps have taken charge in terms of rally, and I think GE Power is probably one of those kind of candidates. Now, what you have to understand is when you look at the charts for these names, you have to understand the volume patterns. Now, whether these are staggered volumes, whether there was no earlier built up of positions into these names, and whether there is just a last phase catch up which is happening to these stocks. And if there's a last phase catch up, by last phase I mean if there is just last couple of days of the price action, there's been certain spurt of volumes, and previous to that there's been hardly any built up, then I think it's a stock price or a stock price pattern which is very short term oriented, and these stocks can go through a sharper correction as well. GE Power, I think, stands in that kind of a category. There is no major built up earlier as well for the stock price, and I sense that after this last 1 week of strong price uptrend, I think from 400 levels to now almost 470, 480 which it tested, I think it's now run up too fast and too speedily. So I think there should be a chance of a short term correction. If you're looking to purchase from a longer term view, then I believe as a level, I would advise a level of 400, 420 as a good support zone for the stock price where you can look to enter.
Okay, all right. With that, we're going to wrap it up on our viewer queries. And thank you so much, Kunal and Gaurang, for joining in with your trading and investing ideas for our viewers and helping them out with their queries as always. With that, slipping into a break here. Plenty more when we come back. Stay tuned.
Hello, welcome back to Buy Now, Sell Now. Let's quickly bring up our BNSN stock cloud like we've been doing. So Asian Paints topping the list here today on the back of that result and some fairly decent volume growth commentary despite COVID, and your margins also improved. UPL on global recovery, India Bulls Housing Finance on the ring fencing going on in the group companies and the fundraise as well. Glenmark Pharma after its tremendous rally still in focus on the back of some drug news. Bajaj Finance has now reclaimed almost 50% higher territory from where it was at 1800, so that's a significant development. IndusInd Bank also been very active, although a bit choppy in trade. Infosys was on, and Wipro and TCS were on the back of the H1B news yesterday, and that's still something the market seems to be digesting today. And then again, you have JSW Steel on the back of the anti-dumping duty coming up in the steel companies, Karanya.